seconds ago, when we were in the commercial break, we saw the finance minister and her team entering North Block. So, leaving from home, we saw her meeting with the president. And incidentally, oh, there it is, pictures of the FM entering Parliament. So, the 0 hour is approaching. Just a word on why she met the president. Under the Indian law, Indian constitution, the president causes the budget to be laid on the table of the House. So while the president has the ability to send back any law, ultimately he or she has the final say on laws and can send it back to the Lok Sabha. The one law she can't send back to the Lok Sabha is the budget, because she causes the budget to be laid. It comes with her approval. That's an excellent design or architecture of the Constitution. Speaking of which, we have to come to the other big architecture of tax. We have with us our guests, Rajeev Dimri, the head of tax, KPMG India, joining us remotely, and Dinesh, CEO, Dhruva Advisors, joining us in the studio. Mr. Kanabar and Mr. Dimri, thank you very much indeed for joining us. Mr. Kanabar, lots expected on how they may tackle this, F&O volumes and the equity exuberance. The economic survey only increased our fears and expectations on that score. What is available to the government?
So today, F&O trade, people who do F&O regularly, are taxed as business income. The question is, could the government recategorize that income as speculative income? Now, today for speculative income, there is no special rate of tax, but it is assessed as a separate block, and the losses there can't be set off elsewhere, etc. So, first question is, can you put it as a separate block? Second is, can you make that block tax at a higher rate? Absolutely possible. So, number two. So, if both of these happen, and then the third weapon, as we were discussing very briefly, is whether there can be an increase in the securities transaction tax on F&O trade. And while the impact of it per trade may not be really that significant, it will yield a huge amount of revenues to the government.
Yes.
So that I can see as three distinctive blocks which can be used or should be used. Latha, just reminiscing a little bit. I used to be on the board of National Stock Exchange, and at that point of time, we had inaugurated a training center, and Prime Minister had come down. And this was in the month of November. And while he was inaugurating the training center, he made a point to say, I can't understand Indian market has become a gambling den. And this was about 5 years ago. 5 years ago. So this is the refrain that F&O has gone beyond all limits, has been going on for 5 years. We have now heard the chairman, SEBI, and everybody else talk about it.
Now it's in the economic survey document, the phrase akin to gambling, so that kind of pretty much lays out the thinking.
So these are the three things which are available. Let's see what happens.
But will it do the job, Mr. Kanabar? If the idea is to reduce speculation and the explosion of retail volumes in F&O, will what you're saying is available to the government, if this is done, will it do the job?
Two things. You asked me a question, what's available from the tax side.
Correct.
And I just stopped at that.
No, because regulatory measures from SEBI side is being worked on, lot size increases, strikes, etc. But from a taxation perspective?
From a taxation, these are the only revenues which are available. There is nothing else with the government can tax you at a higher rate. So you come back and say that instead of 30%, it will be 40%, whatever rate of tax. And the government can come back and say that whatever losses you make there, you cannot set off, this will be standalone. They could go back and say, and this could be a very radical thing, not something which I would think is desirable. But since you are asking how radical it could be, the government could come back and say speculative income and speculative loss can't be set off against each other.
There's another concept.
That's an extreme. That's not taxing real income. I'm just responding to a question as to what else it could do.
The point that you made about tax, if they explicitly say this is speculative income, and it's charged taxed according to the slab rate, right?
That's right.
They can also come and say that this will be
at a flat rate.
At the highest marginal rate. It's possible. That is also
absolutely possible, because that's something which is happening. For example, income from race horses, etc., are taxed separately at a highest rate. Same thing could happen for F&O.
So speculation is one aspect of the debate, and we've heard various regulators talk about it. The other part of the debate is whether there is a need to do something to mobilize more bank deposits, which also seems to be a big issue. Let's bring in Mr. Rajeev Dimri, Head of Tax at KPMG India, into the conversation as well. Mr. Dimri, what's your sense? Do respond to what Mr. Kanabar just said in terms of options to curb speculation. The other piece is whether there can be some tax measures that once again incentivize long-term deposits. I mean, right now the exemption is just a very sort of meager 10,000 rupees on the interest income. Would you expect anything else that can make bank deposits, good old-fashioned deposits, more attractive?
So a couple of points. A, I agree with Dinesh Bhai about the options that are available in tax. I also would extend to say a tax law should be only left to do the taxation and should not become a regulatory law. And therefore, we should not try and regulate a sector through the tax laws. That should happen separately. On the point that you're raising as to how can we incentivize or encourage bank deposits, I have a larger take on this. If we look at the trajectory of tax collections, both for direct tax and indirect taxes, I think it is needless to say that the government has done well. The tax technology has, been playing out and it is stabilized. I think it is time to reward taxpayers at large, and therefore, whether it is deposits, whether it is other forms of savings, there has to be some incentive and some feel-good factors sent back to the large taxpaying community, because the taxpayers have responded and the government has done enough collection. That trajectory has been great. So it is time in this budget. I hope to see some reward mechanism and encourage the widespread taxpayers to encourage whether it's deposit or other forms of investments, which builds equity, capital, so on and so forth.
No, but I guess, Mr. Kanabar, let me ask this to you. I think the incentivization to build equity capital has been there for a while. And even when they brought in this 10% on long-term capital gains, there's still the 1 lakh rupee, yearly exemption that we get. So I ask you the same question. Should we expect any sweeteners for the oldest instrument in town, the bank deposit, considering the wild debate out there, whether there is too much financialization going on, which is what the economic survey talks about?
So, very interesting question. And, as I was driving down to the studios, I was watching your guests at NSE. And Nilesh was actually making a point to say that should we not actually sweeten the equity, because that's where wealth is being created. Everything else just gives a normal rate of return. So there are points and points of view. But that said, very seriously, I think it's a question of whether the government should have incentives at all or not. That's a more fundamental question. To my mind, the government has been pushing people towards a new tax regime where we are not talking of exemptions and deductions, but a lower rate of tax. People should be free to make their judgment calls on the basis of advice that they seek, broad-basing their portfolio in variety of things that they need to do. I don't think tax incentives really can or should be the basis of making things happen.
On the new versus old tax regime, I think in the new tax regime, effectively you don't pay tax till an income of about 7 lakhs.
That's right.
But do we have the data in terms of what is the is the adaptation still slow, because, or has everything been done already in previous budgets to make it more attractive? Because the government is encouraging people to move.
Yeah. So I go back to corporates, where this scheme has been around for a number of years. And I would like to believe, and again, I don't have statistical data, but from my empirical practice and evidence, I can say there may be 85-90% of the corporates have moved from old tax regime to new tax regime. Nobody wants deductions, exemptions. People just want to move on and say, this is what we want to do. Compared to that, individual is only a year old. And it takes 2, 3, 4 years for things to settle down.
But there is also a big difference in taxation, right? Corporate taxation and personal income taxation. I mean, in terms of just the levels of taxation.
Yeah, but that's not the right comparison. The right comparison is that in the corporate, it's 25 versus 30 plus surcharge, 35 plus surcharge. Whereas when you look at individuals, the gap is not still that wide. And the question is, what will the government do this year to make that gap wider and wider and incentivize people more and more to move towards new tax regime? So whatever concessions I anticipate will come for individuals will come for the new tax regime as opposed to... So I'm sorry to take a counterpoint to yours, but I don't think government is really going to give incentives for the old tax regime.
I mean, that would be a departure from their stated path, right? They've been talking about reducing deductions and moving to this new low tax, no deduction regime. So
makes absolute sense.
Okay, but let me put that to Mr. Rajeev Dimri as well. Mr. Dimri, the stock markets at least are expecting something on housing for a whole host of views. Housing is the only employment-intensive construction. Bridges are no longer constructed with that many, armies of laborers as it used to be.
And they get washed away.
Exactly. Okay, that's a different one. Anyway, so housing, a many-sided expectation. Do you think we should see any tax gain giveaways over there?
I come back to my point, and I would want to make a distinction with what Mr. Kanabar is saying, that, there is a new scheme and there's a new design that we need to move away from incentives. I agree. But I'm at a larger point that if there has been buoyancy of collection and if the government is successful, how do you reward the taxpaying community in various forms? Housing is still a basic necessity in India. There are still people who need to own their first houses, growing population, young population. So it is a sector that is needed not just from an economic activity perspective, it is also a sector that is needed from the larger population. And therefore, encouraging investment in housing is something that must continue. If at all, it must get encouraged more. What should be the mechanism? That may be, various ways to talk about it. But to imagine that we will have a most simplest form with absolutely no incentives and the lowest tax rate, while it's very appealing, there are ways in which we want to discourage certain type of consumption and certain type of investments. We also need to encourage certain type of consumption and certain type of investment. It will be done through the combination of corporate tax. It also could be done in the combination of GST, which is another tool that is certainly available to the government. And we should also look at a combination of those two tools.
Right. We're jumping from sort of one tax to the other, but Mr. Dimri, good to have you with us here. On, again, just coming back to capital market taxation, on mutual funds, especially on things like arbitrage funds, which is a category which has grown very, very large now, and that gets equity taxation. There is some fears that it could the government could look at moving that on the to the debt side in terms of taxation levels. Any thoughts?
I would defer to Mr. Kanabar on that, but the point that you just raised, that, we still leave large economic segments and particularly emerging segments with a lot of anxiety in the investors. And there has to be a more proactive mechanism rather than, things coming in after a point of time and disrupting a certain activity. And therefore, that is a continuous area, whether we look at gaming industry, whether we look at crypto, whether we look at things seem to catch up later, rather than it being done proactively. That fear factor and that certainty has to be created as an ongoing mechanism. But on the specifics, I would defer to Mr. Kanabar.
All right, and we'll talk more about that as we go along. Thanks very much for now, both of you, Mr. Kanabar and Mr. Dimri, for joining us and running us through expectations straight up. We'll take a quick commercial break here with news that the market is down. We're down about 40 points on the Nifty. Sameer Chakrabarti of Citi, Pranjal Bhandari of HSBC will be joining us. We'll also have Kaushik Das coming through in just a bit. From now, we'll talk about the big budget numbers, the big macro numbers, which the market will take direction from as well. Stay tuned.